Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who is the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, Ben Bernanke certainly led us a merry dance last week, and good if you were long the markets, not so good if you were short the currency. We got, I think, one of those legs right, but talk us through, firstly, being long of the markets as he came out with that announcement that's well, there is going to be no tapering just yet.
Yes, well, obviously that was a very big surprise because the consensus out there was that that they were going to taper around about $10 billion a month, and that was pretty much priced into the market. So the fact that he came out and he said no tapering at this stage and they'll continue to buy $85 billion a month worth of treasury securities, that was very good news for the market, and we saw the S&P 500 and the Dow Jones rally aggressively. And obviously we came in the next morning and our market gapped up by about 500 points and then just carried on heading north throughout the day. And that Thursday was the day of the futures closeout. So we had those two factors driving the market. The one being the fact that there was no tapering, so we had a positive international backdrop to our market. And then the futures closeout also saw the market pushing higher as well. So it worked out very well. You'll recall that we were long of the top 40 going into that announcement, and it did work out very well for us.
Yeah, although we weren't long of the top 40 on the expectation that he would say something positive for the markets, there were other signals that you'd picked up on. So I don't know if you want to revisit it and show us how that trade actually worked out.
Yeah, that's right. Yeah, well, look, I mean, I think on that note, every once in a while, I suppose you do probably need a little bit of luck in this game, and that did certainly prove to be lucky. However, on the other hand, we were short of the currency where we were particularly unlucky. So we'll talk about both of these trades now. The first, though, was the top 40 future that we were long of. And what I'd identified in previous shows was that we had this diamond pattern on the top 40 chart. Now, this is an hourly chart of the top 40 future. So every candlestick plotting that you see there represents 1 hour worth of trade. Now, these diamond patterns can either be a top formation or they can sometimes be a continuation pattern. But if it were to be a continuation pattern, which this one turned out to be, what you typically do is you take the height of the diamond structure and then you project it up from where the breakout occurs, and that generates your measured target level. So in this case, it gave us a measured target of 39,750. And what we did in order to enact a trade based on this was we bought 2 contracts of the top 40 futures contract at 38,560. I put a stop loss at 38,200. And then last week, you'll recall that I decided to sell one of those 2 contracts in order just to lock in some of the profit, and also because we knew we were approaching the Fed announcement, and it could have gone either way. It could have been a good announcement, it could have been a bad announcement, or it could have been in the middle. Nobody really knew. The fact was that what did come out in the end was a massive surprise, and it did work out for us. And you can see that then come Thursday morning, we had this ginormous gap in the chart over here, and that's where the market gapped up by about 500 points, and then it just continued to head higher into the futures closeout that afternoon. And I didn't actually sell this contract out. I left it. I think I mentioned on the show last week that I would probably just leave it to expire in the futures closeout and see what happens.
So you're very lucky, in fact, because the futures closeout was such a strong day. It was after Bernanke, because subsequently the markets turned down. That's
right. We pretty much closed, the futures closeout ended more or less on the high of the day. Yeah. And then, yes, you're right, it has subsequently been consolidating and coming down a little bit since then. But what it basically meant was that we got out of our first contract at 39,030 and then out of our second contract at 39,882, which was an auto closeout because that was the level of the expiry of this index in the futures closeout.
And above your target.
Yeah, and slightly above the target as well. Yeah. So altogether we managed to bank a profit there of 17,868 Rand, including costs. So quite a nice trade all in all.
Yeah, very nice trade, and obviously it would have been a nicer trade if you hadn't been stung the other way. So tell us how you felt watching what Bernanke was saying, watching what the US markets were doing, what the dollar was doing, and thinking, oh my goodness, I have to brace myself for this tomorrow morning.
Well, yeah, look, I actually was playing squash on the Wednesday night when Bernanke was speaking.
Oh, how cavalier of you guys.
There's nothing much I can do at 8 o'clock on a Wednesday night anyway. Our market only opens the following morning. So, I did get home and look at my BlackBerry and noticed the disaster that had happened to our currency.
Beads of sweat started replacing the squash exercise beads.
Exactly, but there was nothing I could do about it until the following morning, and that was unfortunate, because what actually it meant was that there was a huge amount of slippage on this trade, and we lost a lot more than what I was comfortable to lose. So let's have a look at it quickly. This is a chart of the rand-dollar exchange rate going back over the last 18 months or so. And what I'd identified last week was that the currency had previously broken through this resistance area, and it pulled back to it, and it was pulling back again. And I felt that at around about R9.80, that was an area where the currency was looking like it could potentially turn, and there were certain signals to indicate that it probably would turn. So on the basis of that, I went short the rand by using a currency futures contract. I traded the December rand-dollar futures contract, and we went short at the price on the currency future was R9.94, but that relates to a price on the spot market of R9.81. The difference between the two relates to the time value, the 3 months time value until the expiry for this contract. Our stop loss was at a spot price of R9.69, and it translated into currency futures. That was a level of R9.82. Anyway, as you can see, the market or the currency moved sharply below that line that I'd been watching. And as it turned out, it actually sliced straight through our stop loss at R9.69. And because these currency futures are only tradable in South African market hours here, between, I think it's 9 and 5 in the afternoon or whatever, there was nothing I could do until the market opened the next morning. So in the end, I closed this trade out at R9.57, which was very close to the low, actually, for the rand of that day, as luck would have it. And that ensured that we made a loss there of 7,047 Rand after costs. Now remember that I'd only risked 1% of our trading capital on this trade.
Because you were quite wary about it.
I was, yeah. And so 1% of our capital meant that I was comfortable to lose about 3,500 Rand on this trade. As it turned out, we lost double that amount. And that's, basically referred to that as slippage. The fact is, there was nothing I could do. I couldn't close it out any faster. We came in the next morning. There'd been this shock announcement from the Fed overnight, and the currency was all of a sudden 25 cents stronger than it was the night before. And that happens sometimes in trading. But there's a point that I really want to make here, in that the reason why we limit our risk on the trades on this show to usually 2% of our capital, or in this case it was only 1% of our capital. There's a reason why we do that, because now and again you do get these sort of unexpected events where you can have massive slippage and something can really come along and mess with your trade. And when those events happen, you don't want to have a catastrophe on your hand. So even though we lost double what I was happy to lose on this trade, the fact of the matter is it's still not a catastrophic loss by any stretch of the imagination.
Yeah. Because you've got two instruments for your risk, I suppose, measurement or your risk policies. You've got your stop losses, and then also the amount of capital that you risk. So you never go above 2%. I think maybe 2.5%, but generally never above that. I mean, so if you'd risk 10% of the portfolio, this would have been dramatic indeed.
That's right. If we had risked 10% of the portfolio and lost double what we intended to, then we would have lost 20% of our capital. Now that's a big amount. You need to make 25% on then to get back to where you started, to give you an idea. So that's the reason why we always preach these principles of risk management and so on that we do on this show.
But Garth, there was a sting in this tale, and this introduces maybe a bit of a debate, because some people don't run stop losses, and what happened was, after you had been stopped out, then the currency weakened to your entry points, in fact just above it. So you actually, if you hadn't been stopped out and you just ridden it, you might have ended up on the slightly on the winning side.
Well,
of this
that's
trade.
Exactly right. So I mean, today we sit with the rand trading at I think R9.86. So, and remember, we went short at R9.81. So already today we would actually be in profit on this trade had we not been stopped out of it. But yes, I know that some people say, stop losses are nonsense and what have you. In my opinion and in my experience, stop losses have saved me countless times. I'd say 8 out of 10 times that I've been stopped out of a trade, I've been glad that I was stopped out because it invariably got worse. Sure, this happens sometimes, and I call this being washing machined because it feels like you're in a washing machine where you get just tossed around and get stopped out, then the currency moves the other way and you would have been right, and it's just a big fat mess.
You should have just carried on playing squash and ignored it all.
Absolutely. If I'd carried on playing squash all of last week, we would have been fine today. Anyway, look, this is the story. So we unfortunately, for our portfolio, we come out more or less square for the week, because what we made on that top 40 trade from last week's show until we closed it out was pretty much offset by the loss in this currency trade. So it's one of those things.
So very unfortunate, but there you go, that's trading. Garth, I know you're not putting on any trades this week, but you do want to have a look at the top 40 and where we are now.
Yeah, I want to have a quick look at this,
Yeah, but before we go to that, I didn't ask you anything about the futures closeout. It seemed to be quite a dull one. I mean, although the fact, of course, we added over 2% on the day, but I was chatting to a couple of brokers afterwards, and they said, it's got a lot quieter over the last couple of months, or last couple of quarters, rather.
Yeah, well, we came in with a fairly small open interest on the day of the futures closeout, so that meant that it was generally a little bit of a sort of, I suppose, a quieter closeout than what we've historically seen in the past. But having said that, we did see a very aggressive push during that auction period, which marks the futures closeout at midday, and that was quite exciting. So, I mean, I wouldn't say it was dull, but the volumes that went through were not as big maybe as some prior closeouts would have been.
And of course, futures closeout is all about just either closing out or rolling over forward positions in the market.
That's it.
Okay, so after that detour, what do you reckon looking at the top 40 index at the moment?
Well, I just want to have a look at the bigger picture here. I mean, this chart really goes back about 2 years or 2.5 years on our top 40 index, and you can see that it's been a great time, a bonanza time for our top 40 index over this period. I mean, we've gone from 25,000 in the bottom left of this screen up until we're nearly at 40,000 now. So it's been a phenomenal 2 years in the market. What I want to highlight really is that there's this very well-defined upward channel that is evident on our market. And you can see the way the bottom of that channel has provided support on all the pullbacks, and you can see the way it's also provided resistance on all the rallies in the past. Now we're getting very close to the channel high there, which comes in at about 40,500. And then the lower end of that channel sits at about 36,000. So the point that I really want to make here is that I think we're getting towards, from a technical perspective, we're getting towards an area where this market is rather stretched, and we are approaching that resistance area. And I think that chasing the market on the long side here probably seems a little bit dangerous to me. So I'd be very wary from that point of view. There's also a lot of commentary out there at the moment which is saying that this market's it is unusually expensive at the moment. It's at an extremely stretched PE multiple, and that's not to say it couldn't go higher, but the probability of it going higher is becoming increasingly smaller. So I think we just got to be a bit cautious here from a bigger picture perspective. I'm not doing any new trades this week, as I mentioned, but what I will probably be looking at for next week is one of my option structures, which I like to do from time to time, which gives us a bit of participation should the market pull back, but at the same time won't cost us much money if the market continues to move higher. Yeah. So we'll probably look at that next week. And I know those things are complicated, so I'm likely to write a blog article to go with the TV show to tie the two together.
Okay, good. Because maybe it is worth average retail investors doing at this point to protect themselves. Garth, so what does the portfolio then look like after all this?
All right, it looks fairly similar actually to how it looked at the end of last week. So we're still up 41%. I think we're up by a couple of $100 from where we were last week. So 354,269 Rand is where we're at. We took a loss of 7,000 Rand on our currency futures trade. We made almost 18,000 Rand on our top 40 long position, and then we had a previous top 40 trade before that as well, which was a tiny loss. So as things stand, we're totally in cash at the moment. We've got no open positions whatsoever, which I'm fairly comfortable with, and we'll continue to look for trades as and when I see them. But as I say, I'm going to look at something for next week in terms of putting some downside protection in place, because I think that we do look a little bit vulnerable at this point in time. And I think an option structure would be a nice way to potentially capitalize on that.
Yeah, okay. So Garth, just next course dates, I know you had one quite recently. What's next?
All right, I've got another Understanding CFDs course in the evening on the 3rd of October. That's a 2-hour evening course. And then on my high probability trading courses, I've got one in Johannesburg on a Friday, the 4th of October, and then in Cape Town on Saturday, the 12th of October. If anyone's interested in attending any of these courses, you're welcome to get in touch with me and I will email you the details. My email's there, it's garth@traderscorner.co.za.
And very lastly, subscription to your website.
Yes.
Free 7-day trial.
Yes, well, if you want to get a bit of an analysis or an insight into the analysis that I do, and a lot of the time we give you a sort of a heads up of what's going to be discussed on this show and the strategies that we're looking at, in addition to many other things, you're welcome to sign up for a 7-day free trial to traderscorner.co.za. If you go to the website, you'll see the link there to subscribe.
Okay, Garth, we have to leave it there. Thanks as always for joining us. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.